All right, so we know what the four statements are and that they are required to be made available to the public. Now let's go into a little more detail on what we will find on each one of these statements. So starting with the first one, our income statement or profit and loss statement. Income statement. So it's going to be the items that determine net income. So that would be revenues and expenses. Revenues minus expenses. So let's go into a little more detail. How do we define a revenue? How do we define an expense? These definitions are given in your reading. So just to clarify it though, so revenues are the value received in exchange for our goods or services. Okay. So if we are in a bookstore, a small little bookstore, the amount that we receive in exchange for the goods, the books that we're selling, that we count as revenue, and it's going to show up on our income statement. Expenses, those are the ordinary costs needed to run a business, needed to operate a business. Let's give you some examples. Rent expense, right? We would not have a location for our bookstore unless we paid rent or a mortgage for that location. We need supplies, general office supplies, so we can take customer orders, provide them with receipts, things like that. Probably one of the biggest ones for service companies, at least, is usually rent and employees, salaries or wages that are paid to their employees. I was listening to an interview the other day with a small business owner, and she was saying her top 3 costs were, what was it? I think it was rent, salaries, and then her next biggest cost were those service fees from the credit card companies. By credit card companies, which is why a few places will either encourage customers to pay with cash. They'll provide you a discount if you pay with cash sometimes, or they'll have like a minimum required purchase amount to use a credit card because those fees can be pretty steep for them. Or sometimes they'll just pass along the fee to me. I know at a coffee shop, if I pay with a credit card, they'll just push a little button and it'll say credit card fee. So I'll just pass it along because it can be quite steep for some businesses. All right, some other examples that you might see: advertising expense, utilities, things like that. Those are all normal operating expenses. It just needs to be an ordinary expense. It can't be what's called extraordinary. So things that don't happen regularly. So an example might be like a natural disaster. If they have to pay for cleanup costs, that's not an ordinary regular cost. That's an extraordinary cost. So when we're talking about expenses that go on the income statement, we're just talking about those ordinary costs. We'll do a separate video for the other ones just to keep this one short. So that's what you can expect to see on the income statement.